Yeah, hi, very good afternoon to each one of you. Thanks for giving time on this day today. Well, it's a good day as well. Nifty has crossed 26,000 and we are close to 300 points up in today's session. Now, the question on everybody's mind is I would request everybody to please keep your lines on mute. Yeah, thank you so much. Appreciate that. Yeah, so the question on everybody's minds is what does Nifty or the broader market has in store for us at an altitude of 26,000 and above? So last 12 months we've seen Nifty has sort of not gone anywhere. We've seen correction, we've seen recovery. But if somebody had invested money, say 12 months back, the money wouldn't have fetched a return, something that probably some of the global markets like US markets or European markets have done. So globally, we have underperformed the entire world, whether it be emerging markets or whether it be the developed markets. Uh, the reasons obviously are known to all of us. We are all very social media aware and aware of what are the reasons for the underperformance. But what is next in store for us? So, as we head into this last month of 2025, one thing that has happened is after yesterday's expiry, a lot of shorts by FIs have been reduced, and you have a market which is probably looking to discount the quarterly earnings for the Q3, the numbers of which will come in January 2026. So there is a very high possibility that these numbers are better than last year. Last year we saw that Q3 was a washout, and even the markets were pretty subdued from the period from September 24 all the way up to March 2025. So this time around, the numbers are expected to be better. The base effect comes into play. But also have to remember that this year we've had a fantastic monsoon. We've had 3 rate cuts by RBI. Possibly another one is around the corner. We've seen two big reforms by the government. One was the GST. Okay, so this year we've seen two big reforms by the government, plus a very good festive season, which was also backed by a good monsoon season as well. So the chances of another rate cut are very high, but the festive season should bring in numbers, especially on the consumption side. On the auto side, we saw after the GST rejig, auto numbers were through the roof. A lot of pent-up demand was being met. So, long story short, at least from the earnings side, we should see the markets, at least the market seeing a positive note over there. And secondly, when the trade deal with the US happens, that will be like the biggest sort of reason for shorts to cover their positions, and the market possibly could see a short coverage rally as well. Now, without further ado, let me quickly take you through the presentation that we have for today's session. And I have very interesting charts to show where we can take inputs about the market direction as well as which sectors of the market should do well from here. Now, taking a deep dive into the Nifty 500 index. Now, the Nifty 500 index is an index which has all the stocks, large caps, mid caps, and small caps. And what we've done is we've analyzed the breadth of these so-called Nifty 500 stocks. So what this chart very interestingly tells us that is the first green line that you see over here is the percentage of stocks above 20-day moving average in the Nifty 500 space, which is currently around 26.8 to be precise. Then we have percentage of stocks which are above the 50-day simple moving average. The percentage currently is 34%. And the 200-day moving average, this percentage is below 50%. Now, what does this mean? This gives us an insight as to what is the broader market doing. So we've all felt in our portfolios probably haven't done well over the last 12 months. The reason for that is the broader market has not participated. Now, historically, every time, let's say the 20-day SMA or 50-day SMA, this breadth has gone below Yeah, this breadth has gone below 20%. That has typically formed a bottom this time. Every time it has, almost every time it has happened. Like as you can see in the graph, it has happened multiple times where the green area is where the markets have taken support, and from there markets have seen substantial rallies happening from there. Now, the takeaway from this chart is it is a narrow market for sure, but the index is still not in oversold territory in any way in terms of market breadth. And at the same time, it is not even gone into that blue sky zone where everything moves along with the broader market. Now, whether this thing will happen or not is the future charts and the slides that we have today will enlighten us. So let us take to the next step, which is FI activity. Now, FIs broadly, so this is November because the November series has just ended yesterday, and this is on the extreme right hand side. These are the cash figures. So as you can see on the cash figures, primarily FIs have been short, like they have been selling for most part of November so far. We've all been waiting with bated breath that when do they turn net buyers in the cash segment. So at least what has happened is the figures, the absolute figures have come down in size. So we've seen some odd days where 8,000 crores, 6,000 crores have been sold. But these are nowhere as high as the numbers that we saw early this year, somewhere around February, March, when Nifty was hitting, extreme bottoms around that period. So A, the quantum of selling figures is not that high, and B is the long-short ratio of FIs seems to be bottoming out. Now, as you can see in this graph, the green line is the long-short ratio, which is currently around 15%. Now, the long-short ratio has been this oversold for many weeks now, and Nifty has slowly, gradually inched towards 26,000. So whatever shorts FIs have maintained in index futures, they haven't really been profitable for them, and probably that is one reason why they haven't rolled off much of their shorts into the new series. So where is their positioning in terms of the index futures at an absolute level? So as you can see in this graph, the top chart is of the FII OI in index futures. The current OI is 94,689 contracts, which is way lesser than close to like 2 lakh contracts we had a couple of months back. In November, this was around 1.7 lakh contract short. So from 1.7 lakh contract shorts approximately, they've come down to below 1 lakh contract short. So this has aided, or rather they have sort of not been able to drive the markets down in spite of having such aggressive shorts. On the other side, prop guys or the pro guys, these are the guys who are proprietary traders. They have maintained long positions for most part of November, and they have been rewarded well. So as you can see the graph, the lower side of the graph is where the prop guys have maintained their long positions in index futures, and Nifty has done well over this period of time. Now let us look at what the father of all markets is doing, which is the US markets. Now we did see a sharp correction happening a few days back in the US markets, but the last 2 or 3 trading sessions, the rally or the recovery has been quite a good one. There are talks about the war sort of coming to an end between Russia, Ukraine. Reasons will come, but what is happening over here is there is a green shoot of a possible Santa rally happening in the US markets, primarily because if we saw around 3 days back, 4 days back, the market was in heavily oversold territory in terms of sentiment. So the sentiment indicators that we track, they were saying that US markets are in an extreme fear mode, and US or the Dow Jones was just down by around 1,500 points from the top. And mind you, last 6 months, US markets have been on a month-on-month winning streak. They have been adding gains for consecutive 6 months in this calendar year, and December could very much be similar on the similar lines. Now, if you look at Nifty, now question on everybody's mind is why is Nifty not performing if everything is into place? So to begin with, Nifty has performed. It's not that Nifty has not rallied. It's just that probably the mid and small cap space, particularly the small cap space, where a lot of retail clients have their portfolios have not participated in the rally that has happened in the Nifty. So if you look at Nifty, somewhere in March, we formed a bottom. April, we retested that bottom, and then a rally began in Nifty. Post that, we saw multi-week consolidation, a channel, as you can see in the graph on this slide. And now we are, this is today's close, has been a very firm one, above 26,000 mark, which indicates that December series have started with a bang. And December series has started light. The absolute open interest in Nifty, whether it is a long-short ratio, or whether it is the overall derivative sentiment, it is on the lighter side. So what that puts us into a place is there is a very strong chance that provided the trade deal happens with the US, provided the RBI cuts rates, which are two big triggers lined up for the month of December, we could see Nifty heading towards 26,500, 26,800 as well. So the trend remains bullish. Supports are there at multiple levels. So 25,800 is the first support for the Nifty, but the bigger support is at 25,500, which should act as a very solid floor for the current setup in the market. So keep these two levels in mind going ahead into the December series. And if you look at the pair between Nifty and Bank Nifty, very interesting development has happened over here. So over the last 1.5 month odd, we've seen Bank Nifty outperform the Nifty by a very big margin. Now this outperformance is primarily because of the PSU Bank rally that we've seen, amazing rally in the last 2 months, and Nifty sort of remaining range bound. So this chart is indicating that there is a very high possibility of this ratio reversing. Now whether it reverses immediately or it reverses after a while, only time will tell. But based on the technical indicators, what it is suggesting is that there could be a period in December where Nifty, once it achieves, once Bank Nifty achieves its bullish targets, it could be the RBI policy which could act as a pivot, from where we may see Nifty sort of taking lead and Bank Nifty underperforming. So this could be a very good pair trade for the month of December. Where we could see Nifty outperforming the Bank Nifty. Now, when does that exactly start happening? My guess is it should be around the RBI policy day. So banks are anticipating a rate cut. When the rate cut happens, Bank Nifty probably could see a rally. And once that rally materializes, that could be a solid pivot point to sort of take a pair trade between these two indices, which is long Nifty and short Bank Nifty. Again, this is to be done with the stop loss. Don't do it without a stop loss. Have a stop loss placed at about 2% at the exposure level, and then one could look to take this trade. If we look at one step deeper, which are the sectors of the market sort of which can outperform. So one of them is the mid cap space. So as you can see in this graph is where we've highlighted a cup and handle pattern on the mid cap 100 index. Multi-month, in fact this has been happening since September last year. So September to September, and again now we are in December. So this breakout has happened a few weeks back, and what the date or what the analysis or the pattern which is cup and handle tells us that there is big upside to be had in mid cap space. So mid caps have entered into that blue sky zone. Blue sky zones means there is no resistance historically present at these prices. The prices have entered into new life high areas where price behavior is not known. But given the cup and handle pattern, it is essentially a bullish pattern where breakout has happened, and we are seeing the mid cap index doing particularly well over the last few weeks. So this outperformance is here to stay, and as long as this index remains above the yellow line, so yellow line as of now is at 16,294. As long as the mid cap index stays above that line, this pattern beholds, and we could very well see more upside happening in the mid cap space. Beg your pardon. Now, what is also happening is the IT space, things have started improving slowly, gradually. As you can see in the graph, we have the MACD indicator, which has seen a bullish crossover. We're seeing the RSI move above 50. We're also seeing the rate of change becoming very positive at 10.7. So multiple technical indicators are suggesting that IT could come back, and it has come back into flavor after the big cuts that we saw a few months back. The consolidation probably is now over, and we could very well see IT stocks doing well from here. Okay, coming to the next sector, which is autos. Like I shared, autos have been on a cruise mode since a while now. So after the GST cut that was announced on the 15th of August, we've seen auto stocks do extremely well. And now they are heading into a resistance line very close to the dotted line that has been highlighted on the chart. Above this, again, they also enter into a blue sky territory, which means historical evidence of price behavior at these prices, which means possibility of autos doing continue to do well is also higher. So the street will also be closely looking at the Q3 numbers of auto stocks. So the January numbers could sort of decide the trend, give more boost to the trend as well. So as of now, the technical indicators are pretty solid, and auto index is at a crucial resistance line. Once it crosses that, there is a fresh breakout to be had in the auto index as well. Now the conclusion, so time correction that we had in the Nifty is expected to end. This probably has ended as we've crossed the 26,000 area, about 26,000. We expect Nifty to aim for 26,500, 26,800, even 27,000 plus could be possible in the next 2 months, given the kind of events and the Q3 numbers that are expected. Supports are placed at 25,800, 25,500. So maintain a closing stop loss of 25,500 for the bullish view that we've shared. And in the first tranche, we expect large caps to do well. Large caps will join the party. Mid caps have been already doing well. They continue to do well. But on a very immediate scale, it could be large caps which could spring in a surprise. And obviously, if Nifty has to go to 26,800, it has to be via the large cap route. So this is the view that we hold for the Nifty index going into the month of December. This is a short summary of myself for those who have missed. I've been in the JM family for almost for 5 years now, and since the last 19 years I've worked with market organizations across the industry. The primary strength of myself is technical analysis and interpreting these large trends in the market. In case you have any questions and queries, the floor is now open for Q&A.
Do you think India would grow at 6 to 7% a year in coming years, so an investor can expect to generate better alpha?
Yeah, so the growth is something that India has been chugging along pretty nicely, even in times where global economies have shrunk, and we've got the right demographics and dynamics for it as well. So my sense is with the rate cuts that have happened, with the reforms that the government has taken place, and maybe there are more in line possibly for the budget of next year, there is very good chance. And most importantly, what was a problem earlier for us is the crude oil imports. The crude oil prices, they have remained cool. And at the same time, India has also diversified at an international level in terms of procuring the oil from different markets. So that has also helped us big time in terms of managing our current account deficit. So there's a very good chance that we continue to grow at these levels, and the Nifty also sort of sees takes inspiration from there, and we continue towards the north trajectory that we are in.
Will Nifty cross 27K next year?
Okay, so 27,000 is more of a psychological number for us. For the market, it is possibly could happen in the month as well if the short covering happens. Just to give you a perspective, Japanese markets have been up 65% since April till date. US markets have seen 6 months of non-stop rally. So globally, we have been in a very strong bull run. It's just that we missed this bus in this calendar year. But since our fundamentals remain strong, technical structure is also indicating about 26,000, that the trend is expected to be positive. So 26,000 is possibly only, the doubt is not whether we will hit 27,000, the question is, when do we hit that? So, the right mix of positive development and short covering could, possibly make it happen in the next 3-4 months time.
Which sectors will drive the markets next year?
Yeah, so that's an interesting one. So, auto and IT is something that we expect them to do well in the short term, which is next 1 month or so. But if you ask me next 12 months, which are the sectors that will do well, I feel there is a lot of catch-up rally to be had in private banks vis-a-vis PSU banks. The PSU banks have sort of, taken off in the last 2 months. The PSU bank index is up 30%, if I'm not wrong, in this period. And the kind of ratio that these banks have enjoyed, the PSU versus private, so there is a lot of catch up to be done on that scale or that side. Secondly, there is a very positive outlook on the overall consumption theme for India, whether it be the white goods space or whether it be essentially the travel sector, like the airline stocks or hotel stocks. So as per our estimates, around 78,000 crores of liquidity is into the system, which is a rotational liquidity which has come due to both the GST rate cuts and the income tax regime. So this money will have a multiplier effect on the economy, which brings in more and more in terms of business to these sectors. So consumption as a theme should remain central for us, regardless of what happens globally, regardless of what challenges we face globally in 2027. This is one space which should remain shielded and can continue to do well over the next 12 months.
Request you to share your view on the small cap 50 index.
Yeah, so that is one space that has been underperforming by a big margin, and we haven't seen the kind of rally happening in the small cap space. Now, when do small caps move? So historically, when we see small caps, they are the ones which sort of are the probably slightly bit late to join the party, but these are the ones which enjoy the party the most in terms of the percentage return. So the alpha that is generated in the small cap space is humongous. Now, I don't have an answer as to timing wise when will it happen, when do small caps start participating. But as a portfolio strategy, it is advisable to have to be overweight on small caps and mid caps, because that is where the alpha is, and stay invested at least for the next 12 to 24 months time frame, or simply could do an SIP on a monthly basis on the small cap space. The quality small caps are the ones which will get picked up first, so focus on the top 100, possibly the small cap index constituents that will give you a lot of insight into which are the stocks to go for. And sooner or later we expect small caps to join the party as well. So large caps and mid caps are the first ones to move. I think the next move, once Nifty materializes its targets for this up move, we could very well see small caps joining the party and doing well for me.
Request you to give your views on gold and silver.
Okay, so gold and silver, my view is still positive in them. So structurally, gold has seen a very, very big rally over the last 12 months or so. So if you have a 3-year plus view, I think or rather the better way to put it is, gold is a buy on dip. The view is not so bullish at these levels. For a trading buy, yes, but for an investor, it is better to wait for dips to happen. Silver on the other side is relatively much more robust, much more strong. Primary reason being it is more of an index, more of an industry application of silver. So from that perspective, silver I think is in a multi-year bull run which has started this year. There will be corrections time and again, look to add into those corrections. But both gold and silver, I think between the two of them, silver should perform. Gold is, if you see like a dip of 10%, 15%, 20%, you could look to re-enter into gold. But if you're holding on to the precious metal as a portfolio exposure, it's time to take some profits in gold and sit on the sidelines. Nifty has moved to 26,000. My portfolio has not performed. My suggestion would be hold on to your portfolio. You could have some quality mid caps and small caps in your portfolio. Do not throw in the towel because, like I said, sooner than later, the mid caps and small caps will catch up with the market. And like in the first place, you would have bought these stocks with a long-term time frame in mind. So give it the long-term commitment that you made. My suggestion is, or rather the view is, although I reserve the right to go wrong, is that large caps have started possibly their rally about 26,000. Mid caps were already pretty strong. Small caps, sooner or later should join in the bus. So stay invested is the advice on this one. If Nifty Bank Nifty ratio will play out, which sector will move Nifty? That's an interesting one. So IT is one of them which comes to my mind. IT has underperformed the market by a big margin. We could see financial, in fact, in terms of percentages, it is around 12%, 12 or 14% is IT. Auto is about 12%. So auto continues to remain strong. IT joins in the league of sectors which can do well. And apart from that, let's say if Nifty does get sort of, if bank or other banks do see profit booking, we see that there could be a diversified approach to this. The money could be seeking better risk reward opportunities across rest of the sector. So the clear answer is IT as of now, because that is where the risk reward is the best placed. But in case anything new sector comes up, we'll be more than happy to share it with all of you on social media and through such webinars that we keep on conducting on a monthly basis. How defense sector will play out in the December series. So December series, I don't have the answer to that, but defense overall it has started a very strong uptrend. It started somewhere around March, April, where we had the India-Pakistan thing. Operation Sindoor happened. India became visible at a global stage as a possible arms supplier as well. So from a defense theme, I think we are into a 3-year bull run in terms of the defense theme. We've seen a big rally, we've seen a cool off. Now possibly next level rally could be brewing from these levels. So from a 1-year plus perspective, defense remains a very strong contender going into 2026. Are you seeing signs of divergence in the Nifty? Now, divergence can happen from time to time, and obviously it is because the Nifty has slowed down. So unless and until there is a price confirmation that says the breakdown, divergences are not to be taken so seriously unless the price confirms it. So keep an eye on divergence for sure, but do not act on it just because the divergence has built. Because markets there's a saying that markets can stay irrational more that you can stay rational. So you could probably give it a sort of a skip as of now. Once the breakdown, the crucial support for this series is 25,500. If that breaks, that could be a price confirmation post which you could take decisive action on this year. Yeah, thank you so much.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.